Hey traders, thank God it's Friday. So I'm going to do a video recap on ticker CLEU, and this is a chart that I think resonates with a lot of people, and it's a great example of how you can day trade penny stocks for a great gain. So when we look at the 1 year, 1 day chart, which I love the reference because it shows you the big picture of how this stock has done over time. And in the last year, it's been pretty stagnant. Besides maybe 1 day where it kind of put up to almost 11 and came back and closed very low, it's been pretty mediocre, kind of dropped a lot here. But today was a pretty big red day. And by what I mean by that is the stock was able to go from its previous closing price of $4 a share all the way up to around $10 a share in the pre-market, and now it's at $6.40. So it kind of went up and now it's coming back down. So it kind of had that trend reversal. So when we look at the 1 day, 1 minute, this gives you a little bit more of a clear understanding of what happened exactly today. And so after hours, it continued to push up, and this morning it continued that push up as well. So overall, from 4 to 10, it is about a 2.5 percent, like 250% gain in the stock price. However, as we saw from the chart history, it hasn't really gone up, and it doesn't deserve to go up that much. It really has kind of been stagnant over time. As a result, this stock has pulled back tremendously in a short amount of time. So how can you trade this stock for a win? Should I get in here? Should I get in here? What am I doing if I'm trading this stock and I see it's moving up, down, up, down? Well, a big thing is to be short biased when you see a stock up that big a percent in 1 day. So when we look at a closer look of near market open, 8:15 is when it really started to get volume from $6.50 and pushed all the way up to here. So if you wanted to go long, you buy here and you probably sell here, but ideally being short biased on a stock like this, which means you sell first and you buy later at a lower price to make a return, is more ideal. So let's look at each candle a little bit closer. Here at around 8:50, it hits 975, pulls back to 8.5, and pushes up to 10. So when you look at what the resistance is, it's around this range right here, 982. So when it tried to break that and it failed and it came back and hit this as resistance, this line right here, you can distinguishedly tell that this stock is now officially bearish and it should continue the downtrend. And from there, you can continue to hope that it will pull back a substantial amount from where the previous closing price is, and you can come back and buy later here. So when you look at how you can plan to make a trade, again, 982 was that resistance that held and pushed it down. So if I'm shorting, I'm selling at 975 and I'm going to risk to 1075, which is 50 cents above the high of day. So you should be in the clear, and you want to have a target price to buy if it goes in your direction, maybe 75, which is about $2.25 a share from where you sold at. So on a 200 share position on a $10,000 account, you can look to get a profit of $450 or a loss of $200, depending on the direction of the stock. So as we highlighted in this circle, you could try and get in here and get that 975 entry point, and because you stop out at 1075, which didn't hit, and you hold till 75, as I mentioned on this position size calculator, which started to hit right here at 930. So from time of entry 920 to 940 is 20 minutes for about what percent return, which is also very important because you want to know how much percent gain, which is 22%. So that is a fantastic return, but on your account, you're creating a 4.5% return on this account size. So even though the stock moved 22% in your direction, your account size only grew 4.5% because you took a 200 share position size. Now, you big thinkers out there are like, Neal, I want to make more money than 450 on one day trade. I think this is a great setup, great strategy. How can I make more money? Well, there's two ways. You either have a tighter stop loss, so you maybe if you only risk 50 cents, you can double your position size instead of risking $1. So if you got in at 975, you're going to risk the 1025. So now you can take a double the position size and make double on the account. Or if you want to keep the same stop loss risk, you either have a bigger account size, so then you could take a bigger position size, or actually a third way you can make a bigger position is if you're willing to risk more percent per trade. If I'm willing to risk 3% on my $10,000 account, I can now take a 300 share position and that'll increase my potential win. So all in all, there's three ways you can make a bigger gain on this one. However, I think the strategy is very important because you got to identify the resistance, you got to identify where you're going to stop out, where you're going to go and take the win, and why this is the play that you want to make in the direction. Because if you want to go long here, you have to hope it goes up, but you have to identify that being more short biased and bearish will help this and your prediction occur if you want to go down. With that being said, have a great weekend. I hope there's more plays like this going forward because of the percent move that can occur and the ability to make a big gain.